everybody, and welcome to What the is Forex. I just wanted to put this video out there, and I know there's a lot of mystique, a lot of interest in the foreign exchange market right now, and there's a lot of misconceptions and a lot of confusion going on, people trying to sell a lot of stuff, and I just thought I'd put this out there. And basically what I'm going to do in this video is briefly just give you a little background, a little information, maybe a few definitions, and a little overview of how all this goes on and what the is Forex. Okay, the foreign exchange market, more commonly known as Forex, is a world market for purchasing and selling currencies, all types of currencies from everywhere. The market sees a huge volume of transactions 24 hours a day, Monday through Friday. The market is closed Saturday and Sunday. These daily transactions total approximately $1.5 trillion US. That's right, $1.5 trillion. That's trillion with a T. In comparison, the United States Treasury bond market sees on average $300 billion in transactions each day, and the American stock market's about $100 billion each day. Very easy from these numbers to see that Forex, the foreign exchange market, is a huge, huge market with tons of potential for both gains and losses. Yes, you can make a lot of money in Forex. You can also lose money, so it's good to be careful. The foreign exchange market itself was established in 1971 when fixed currency exchanges were abolished. At this point in time, currencies began to be valued at floating rates, which were and continue to be determined according to supply and demand for the currencies. The Forex market experienced steady growth in the 70s, and with the technology advances during the 80s, Forex trading swelled from $70 billion a day to today's $1.5 trillion level. 5,000 trading institutions currently make up the Forex market. These institutions include international banks, central government banks, companies, and brokers for all types of foreign currency exchange. There is no centralized location for trading Forex, and trading centers are located all over the world, including Tokyo, New York, Hong Kong, London, Paris, Singapore, Frankfurt, Germany. They're located all over the world. And another thing that makes Forex fairly unique is all the trading is conducted over the telephone or via the internet. And although businesses, private businesses, publicly traded businesses, you name it, although they do use the market when they buy and sell their goods and services, wares around the country, the majority of the activity in the Forex market is generated by traders, currency traders, who use the market to produce profits from the movements in the particular currency. So the majority of the activity of that $1.5 trillion worth of activity each day is produced by traders. So there's some are winning and there's some are losing. Again, I want to stress that there's a lot of money to be made, but also there is money to be lost as well. So be careful. Of course, you know, that's where my interests lie in making money, and probably where yours do too if you're watching this video. So even though there are many big players in Forex, one of the good things about it is that it is very accessible to the small investor. Okay, prior to recent changes in regulations, there were minimum transaction sizes, and traders were required to meet very strict financial requirements. But with the onslaught of internet trading, regulations have been changed and eased, which allow interbank units to be broken down into small lots rather than the huge lots that existed previously. Each lot worth about $100,000, very accessible to the individual investor through leverage. Okay, and typically, you know, lots of $100,000 can be controlled by $1,000 US. Basically, it's about a 10 to 1 deal through leverage. And of course, leverage is basically in a easy to understand form is loans extended for trading. Forex markets does have many advantage over other markets when it comes to trading. Number one, Forex is a completely open market. Okay, so currency changes are due to fluctuations in national economies, and the news of these fluctuations and the economies are accessible to all traders at the same time. So there's no insider trading, no insider information. All that stuff that goes on in the stock markets does not exist in the Forex market. All the information is right out there and available to everybody at the same time in real time, typically with today's news cycle and the way we get our news and information. Another big asset for the Forex market is accessibility. The market's open 24 hours a day, Monday through Friday. It's open to all traders, big and large, big and small. The market opens on Monday morning, Australian time, and closes Friday afternoon, New York time. Traders can access the market from anywhere, provided they have phone service and or internet capability. The Forex market also is highly liquid. Investments in the Forex market are extremely liquid due to the sheer size of the market and the volume of trading. International banks are constantly providing bid and ask offers, and the high number of transactions per day ensures there are always buyers and sellers for any currency. So lots of buyers and sellers. Again, a lot of opportunity to make money. The Forex market also offers no commission trading. Brokers earn their money not by commission but by spreads. And spreads are the difference between what a currency can be purchased for and the amount it can be sold for. Okay, kind of an overview there. A lot of things that I'm throwing at you very quickly, but just at a high level, just trying to explain, you know, what Forex is, and now just briefly, how does this thing work? How does it work? So briefly, traders always trade currencies in pairs. For example, the US dollar against the English pound, or the Japanese yen against the euro. Each and every transaction involves purchasing one currency and then selling another, or vice versa. Okay. In short, if an investor thinks, you know, say I think that the yen is going to gain against the euro today, what I'd do is sell the euro and buy yen. Okay, so the potential for huge gain exists due to the volatility of the movement between the currencies. Small changes can result in big profits or big losses, so be careful and be prepared. Having said that, Forex is a relatively safe market for the investor, and I know I've been urging you to do your homework and to be careful, but Forex is a relatively safe market for the investor due to built-in safeguards that protect both the broker and the investor. A number of software tools, both online and off, are also available to help investors build and test their strategies, offering the ability to maximize profitability while minimizing the chance of a big loss. And of course, that's what you're looking for as you move forward and you find yourself an online platform or a software tool, whatever you're going to use to trade. You want one that will allow you to develop your online strategy, something that you can test over time that you know will work before you throw your money in it live. So that's a big thing there. Profit and loss is greatly dependent on developing a sound strategy, as I said, based on your aversion to risk or lack of it. And then, of course, you implement that strategy over time. In closing, I would encourage you to read and learn as much as you possibly can about the Forex market and how you trade in it, why you trade in it, those types of things. And sign up somewhere for an account, one of the online brokers, purchase one of the popular software platforms, and do one that allows you to do demo testing that you can run and you can test multiple strategies and see what works for you, what doesn't work for you based on your aversion, like I said, to risk or lack of it, and test those strategies in demo mode, in test mode, before you start trading live. That way you'll save yourself some money and you'll enjoy your Forex experience a lot more. Again, I thank you for watching this video, and I hope you found it useful.